Welcome back. It's time now to take a look at the top business stories. World Energy Summit kicks off in Abu Dhabi. Tabreed said weeks away from debt restructuring agreement. And we find out where the UAE was placed in the Global Optimism Report. The GCC markets ended lower today and the UAE bourses ended mixed. The DFM rose 0.5% to close at 1,608 points. The property sector saw gains today as EMA rose by 0.75% and Arab Tech was up over 1%. Emirates NBD fell 1%, Dubai Islamic Bank on the other hand rose by 0.5%. DU gained nearly 3.5% and DP World was up over 0.5%. 42 million shares were traded, valued at 69 million dirhams. And over in the capital, the ADX fell over 0.75% to close at 2,690 points. Abu Dhabi Commercial Bank fell nearly 2% and Alder Properties lost 2.75%. In the energy sector, Dana Gas fell 1.25%, while TAQA rose 0.75%. 75 million shares were traded, valued at 131 million dirhams. The World Future Energy Summit 2011 kicked off at the Abu Dhabi National Exhibition Centre. The conference provides leading-edge information for delegates in the form of valuable insights, case studies, research findings, interactive discussions, masterclasses, as well as presentations. Renowned business leaders, policy creators, public decision makers, as well as industry experts from all over the world gathered at the event. June Wrigley has the official report.
Since the launch of the World Future Energy Summit 3 years ago, this forum has become the foremost meeting place for top world and business leaders to discuss issues related to energy. Spearheading the green initiative in the UAE, Masdar CEO spoke of a green vision.
The energy solutions the world needs today cannot be driven by one country alone. They will be found across borders and built between nations. They will be stimulated by collaboration and founded on public-private partnerships. With this in mind, the UAE has placed great emphasis on engaging and contributing to international energy and climate change discussions. However, the most important progress made over 2010 was the shift from a top-down, internationally driven approach to a more realistic, bottom-up, country-led effort. And as a result, we now have a substantive and balanced package of decisions and a clear roadmap of the way forward. These are significant developments that bring us closer to a global deal.
And another prominent world leader who has described climate change as one of the defining challenges of our time had this message.
Our challenge is transformation. We need a global clean energy revolution. A revolution that makes energy available and affordable for all. This is essential for minimizing climate risk, for reducing poverty, and improving global health, for empowering women, and meeting the Millennium Development Goals, for global economic growth, peace and security, and the health of our planet. You can lead this revolution, and in many ways, many of you are already doing so.
Both messages were clear in underscoring the necessity for clean, renewable technology, calling for a clean energy revolution in order to not only improve global health, but also the lives of our generation and those of our children.
We are on the brink of exciting, sustainable future. Clean energy for all. Achieving the target by my advisory group could cost $35 billion per year over the next 20 years, a total of $700 billion. This sounds like a lot, but it is merely 3% of projected global energy investment over the same period. So let us pledge to invest wisely. We need to get our priorities right.
This summit is unique in bringing together both the public and private sector to focus on renewable energy. Alongside visionary leaders and policymakers, the exhibition hosts over 600 leading players in the production, installation and integration of products in the renewable energy value chain. June Wrigley, 7 National News.
It's been reported Abu Dhabi-based district cooling company Tabreed is just weeks away from signing an agreement to restructure nearly 5.5 billion dirhams worth of debt. The company's total bank debt of about 3.7 billion dirhams, as well as payments owed to its largest shareholder Mubadala of 1.3 billion dirhams, will be rescheduled into 2 new loans. Tabreed's banks have been asked to approve the restructuring plan. The program will give the cooling firm more time to repay debt but not reduce the amount owed. Meanwhile, the CEO of Moelis & Co., an advisor to Dubai World concerning its $25 billion debt restructuring plan that was sealed in September, says the restructuring model used for Tabreed will serve as a template for other companies that also need to restructure their debt. And for our editor's pick this week, we're now joined by Mary Badi from Forbes magazine Middle East. Welcome to the show, Mary. How are you?
Thank you.
The Forbes magazine's Middle Eastern version was launched a couple of months ago. Also, in the near future, we will have an English version of that. Tell us, what is your pick of the week?
Basically, the pick of the week is the cover story. As we have already started the new year, our January issue is an exclusive interview that Forbes has conducted with Mohammed Al Fayed. Mohammed Al Fayed is an Egyptian businessman that we all know owned Harrods for 26 years and has decided to sell it to Qatar Holdings, which is owned by the Qatar family, royal family. Basically, what the story discusses is a lot of the reasons why Mohammed Al Fayed decided to sell his empire that he's had for 26 years to Qatar. Many of the reasons include him falling into debt, which he talks about as well in the interview. Also, the reason why he chose Qatar Holdings. A little bit on also that he has been speaking to the Prince of Qatar years ago, and has actually promised him that if he ever thought of selling Harrods, he would sell it to Qatar. So, in the sense of, Qatar is still it is still an Arab kind of owned by an Arab entity. This is what Mohammed Al Fayed wanted to maintain, and also there's more information in the story on how Qatar wants to maintain the level and maybe even put it up a bit after owning Harrods.
What was the most interesting that Mohammed Al Fayed said in his interview?
Basically, there were a lot of interesting things that he said. One of them is what I mentioned, that he has been falling into debt, which actually is one of the reasons why he decided to sell Harrods. And for other reasons that, as we all know, he doesn't have a very good relationship with the royal family in England. So these are one of the reasons why, as well, other than that, actually, is the fact that it took so long for him to get his profits from his shares, from Harrods. He kept on saying that he was tired of it, and he decided that this was the right time for him to move on and do something else with his life at the start of the new year.
In your next issue that will be out in a few weeks, you will be talking about the best credit cards in the MENA region. Tell us about that.
Basically, our Forbes Middle East research team has got together to basically gather all of the biggest credit card issuers in the Middle East and rank not the banks nor the credit card operators. We're ranking the credit cards themselves. This ranking is going to be the first of its kind in the Middle East. I really encourage people to take a look at the ranking, because it is of a huge help to people who are thinking of getting credit cards or people who already own credit cards. It's a very big package. It discusses the consequences maybe we can say, of misusing your credit cards, and gives you a little bit of advice on how you should choose wisely.
Wonderful. Thank you, Mary, for coming in today.
All right,
have a great week. And in our fast financial news, the UAE investors are looking towards the US to size high-end properties after a quiet 2009 and 2010. London and Paris were the investment choice of last year for UAE property buyers, but rising prices in Europe have turned their attention back to the US. Analysts say national companies are looking in areas such as Washington and New York as sovereign funds from the Middle East start to reappear. Back in 2007, UAE investors were the largest buyers into US commercial property, spending more than $21 billion US. That nearly came to a halt in 2009 and 2010, when only smaller purchases of 300 million were made. Du has stopped sales of the prepaid iPhone 4 to stop black market sales, where the smartphone sold unlocked for 2,100 dirhams. That is an 80% markup. The company has not stated as to when it will resume selling the iPhone 4. And now for a detailed market analysis, we're joined by Anil Sachdev, futures dealer at ACM ME DMCC. Welcome to the show, Anil. Let's start off with the equity markets in Asia. China took further steps to tighten its monetary policy, and speculations are high that also other Asian countries will increase their efforts to tame inflation. How did the Asian indices react to this uncertainty today?
On Friday, we saw two major news. One was China's decision to increase bank reserve ratios by 0.5%, which was the fourth time in 2 months. And US news mixed with retail sales rising only 0.6%, industrial production by 0.8%, Michigan confidence dropping to 72.7. The effect was seen today when Asian markets dropped across the board with fears of more tightening policies in China coming up. The Shanghai Composite dropped about 3%. The Nikkei was a little unchanged. The Hang Seng dropped 0.5%. And we could see further tightening policies in China coming up as property prices in China rose for the 19th month, which could show that the illiquidity issues are still there and inflation levels could move up higher. And China could take more actions in form of further bank reserve ratio hikes or interest rate hikes. There are chances of other nations in the Asian region trying to also increase rates, looking at the inflation levels, with South Korea raising rates last week to 2.75%.
European finance ministers have begun working on a new debt crisis strategy today, with Germany easing its opposition to extend the 440 billion euro rescue fund. How much pressure does that put on the euro? What do you think?
The outlook is negative for Greece, with the reason citing as heavy public debt on the Greece government spending. Now, Greece says that they will not budge from restructuring its debt, while other Euro nations are asking for restructuring of the debt, which is only better for the nation. S&P and Moody have kept a downgrade watch for Portugal and Ireland, and this could be the case if Portugal goes for a bailout and they are not able to raise enough funds. Today we also have the meeting of finance ministers from the Euro region, where further enhancement of the debt crisis strategy could take place. Now Germany has eased their stance on opposing the increase of the bailout fund, which is about 440 billion euros, and we could see any positive signs in the meeting when there could be talks that Portugal may not need bailout funds, and there could be talks of expansion of the bailout fund of the Europe, and that ECB may not have to purchase more bonds if the European Financial Rescue Fund issues bonds themselves.
Let's talk commodities. Is gold reacting to concerns that the EU debt issues could take longer, giving rise to demand for safe assets in the form of the metal?
Gold may gain to 1365 levels again and moving up to 1390 levels because of the Greece being downgraded by Fitch, and investors seeing the metal as a safe haven currency compared to the risk appetite in the market. We could see the gold moving down to 1340 levels if the outcome of the meeting is negative, with no signs of any increase in the funds or Germany cooperating with the European region to help the nations in debt. Also, physical demand in India has been rising, where the investors see the current levels of 1358 at a good price to buy, and looking forward to pushing the prices up to 1400 levels. So with the Greece issue in picture and physical demand rising, we could maybe see the gold prices moving to 1390 levels if there is also a positive outcome from Europe.
Thanks for your time, Anil. And after the break, we speak with